What's up guys, welcome back to DCA. So what we're going to do in this video is take a look at the crypto market. We're going to see where we're at right now and where we may be going based on the events that have played out over these last few weeks. So if we go back here to the end of June, we started this uptrend. We hit around $18,000 for Bitcoin and we started a slow uptrend, making these series of higher highs and higher lows. Okay, so we made this first higher high back here the last week of June. We came back, corrected back down to around $18,500, and we've just been in this slow stepwise progression. So you can see that we were forming this channel here. We were forming a very nice ascending channel where we had this upper level that we kept coming up and testing and getting rejected off of, and then we were finding support down at this lower band. So you'll notice that back here on August 19th, we crashed below this level, all right? And now we've had another big correction off of this upper end of the band, which was acting as support all through this uptrend, and it has now become a level of resistance. So you'll see that we have not been able to get above this level from August 20th all the way to today, where we're sitting at August 27th. We're sitting right here at around $20,000 at the moment. And, you know, this level has significance beyond just this trend line. And if we take a look at, we're just going to draw a horizontal line right here through the price that we're sitting at right now. You'll see that this is actually a key support level right here that we kind of formed back in December of 2020 as we were moving into the bull market. If we come all the way back out here, you'll see that this level that we're sitting at right now, it's a key support level because it's our all-time high back in 2017. We formed this $20,000 level approximately right here on December 17th of 2017. So this is a multi-year, you know, we're talking about a 5-year period almost here, level of support. So this is not a level that we want to see ourselves crash below, especially for a second time. Because if we head below this 20K level, or, you know, if we go below in dramatic fashion and start to hit this level as a level of resistance, I think you're going to be looking at forming a lower low from here. All right. So you can see that we've been making these lows right here, and then we came up, we got rejected off of this around $48,000 level. You know, then we made another low at around 25,000, came back up to around 32K, some of these summer of 2021 levels. And then we obviously had another large correction. And so we're kind of setting the stage right now to potentially see that happen again. So what we need to do then is take a look at this move that we're seeing and ask ourselves, you know, does it make sense based on the numbers that we're seeing, based on the health of the entire market? And so this is a metric that we've looked at numerous times on this channel. This is the price volume moving average. So what this is doing is essentially measuring the liquidity in the market. So we've been saying that, you know, we're seeing the liquidity in the market continue to trend downwards. And you'll see that we're very much like the price of Bitcoin, which is in this downward channel. We're just making a continuous downward channel here. The price volume is doing a very similar thing. We're seeing that we're continuously making lower highs and lower lows. And that is a progression that has been going on now. You know, realistically, this downtrend has been going on ever since January of 2021. Okay, so right around when you started to see the gains in Bitcoin start to slow down. So we had this huge run from around $10,000 at the end of 2020, all the way up to right here where we got to around $40,000. And then that's where things started to get sluggish for Bitcoin. We did go up another 20K from here, but in terms of percentage gain, the price of Bitcoin really started to slow down. And that could have been seen or reflected within the price volume, which is a measure of liquidity. So on a long period of time now, we've been seeing the liquidity in this market drying up. So this is something that I keep coming back to, and it's for the reason that this is a clear demonstration for us of how many dollars are flowing into the asset. And you can see that historically, you know, we can go all the way back as far as you like. We'll put it on a logarithmic scale that makes it a bit easier to see. You can see that we can go back as far as you want here There's a direct correlation between liquidity in the market and the price. We see the price rising when there's an increase in liquidity, and we see the price falling when there's a significant drop in liquidity. And so, as long as we're going to continue to see the liquidity in a significant downtrend for Bitcoin, you're going to see that the price is going to have an extremely difficult time going to any sort of significant rally. So, we're not talking like these moves from 18K up to 25K. No one's getting too excited about that. We're talking about seeing anything on the order of moving towards new all-time highs, or even back to 40K levels or 50K levels. Unless you see a commensurate move in the liquidity in the market, you're just not going to see those prices. And that kind of makes sense. So this move that we're seeing with Bitcoin, the liquidity in Bitcoin or the crypto market as a whole, you're seeing that exactly similar situation playing out in the stock market. So there's a liquidity crunch in the stock market. The Fed is pursuing a quantitative tightening policy, which has a direct impact on the liquidity in the stock market. And that is going to trickle over to the much smaller cryptocurrency market. All right. So I think these things all kind of go hand in hand. And, if you're following the news, if you're following the sort of the financial situation, you'll know that the quantitative tightening policy that the Fed is pursuing is actually ramping up as we move later into the year. So, these things you have to keep in mind because it's obviously going to have an impact. So this is the liquidity for, or the price volume for Ethereum. And you'll notice that it is significantly depressed, much like we're seeing for Bitcoin. Overall, throughout the year, it's actually held up much better than Bitcoin. So Bitcoin we've seen kind of fall flat, whereas Ethereum, it has come down significantly from its all-time high. But in terms of the liquidity coming in to this asset, it is looking a bit healthier than what we're seeing for Bitcoin. So you can see that, we're above right now some of these levels that we've been basically all through 2022. And when we come back to BLX, we're way down here. We basically are at levels that we were at back here in November and December of 2020. All right. And, we're pretty much below everywhere where we've been all through 2022. So the liquidity you're seeing in the Ethereum market, we're all the way up here, pretty much above all of these 2022 levels. So, obviously the merge has a lot to do with this. When we come over here and look at this Ethereum to Bitcoin chart, like we've said many times, Ethereum is knocking on this 0.5 level over and over and over again. So May of 2021, September of 2021, December of 2021, and now again here in August of 2022. Now we did get rejected off of it again. We'll see what happens as we lead into the merge. So I think right now, Ethereum is overall looking a bit healthier than Bitcoin is, and only time will tell if that's going to be a transient event that's only playing out like that because of the merge, or if this is a newer trend that we're starting to see where Ethereum is starting to become the more prevalent player in this market. So overall though, when we look at just ETH USD, we're making this uptrend. You can see that we've been making this uptrend, and actually for Ethereum, we're still above it. Okay. So Ethereum is still technically in an uptrend. And if we look at this from a horizontal view, it's very similar to what we saw with Bitcoin. We're holding the support level that we hit back here in January. And again, that is the all-time high from back to 2018. So we're at two very important long-term, 5-year in the making support zones. So we made this all-time high back here in 2018. We used this as a support level in January of 2021, and now we're sitting there at this moment. So both for Bitcoin and for Ethereum, so we're talking approximately 70% of the entire crypto market is at a huge major support level. So ultimately, guys, this is going to be a critical moment. I try not to, use hyperbole when I talk very often, but when you're sitting at a support level that has formed, going all the way back to the all-time high in the prior market cycle for both assets, it's just the bottom line. It's an important level. So we want to see ourselves hold right here. And if we don't, I think we're quickly going to be looking at some of these lower levels. And that's going to be, you know, right around the $18,000 level for Bitcoin and probably around $1,200 as the next stop for Ethereum. And ultimately, guys, you know, I don't think the crypto market is kind of acting in and of itself at the moment. It's going to depend on the stock market. So if the stock market looks positive, I think you'll see us hold this level. If the stock market continues to move down, if we were just seeing a rally within a broader bear market, then I think you're going to see us continue to head down from here. So that's what I'm watching for, guys. I think this is ultimately going to be extremely important, and you know, we'll continue to watch it. And if anything important happens in the market, I'll be here to update you guys. So until next time, as usual, see you.